Hey folks, Dan Frio here with our live event where we're going to talk tariffs, we're going to talk markets, we're going to talk stock markets, bonds, and everything else. Because my goal here is to make sense of this market for you guys. Because every day, here's what's happening kind of behind the scenes. We still have many people buying homes, and many of the areas that we're looking at. I talked to a young man in Utah yesterday, and he's like, it is crazy over here. Another person in Vermont saying prices keep rallying up. So what we want to talk about in today's video is, with everything that's going on right now between tariffs and immigration and everything else, what can you expect? So that's what we're going to talk about in today's show. We're going to talk stock, bonds, cryptocurrencies, and especially real estate and interest rates. So if you have any questions, please, it's a participation game today. Please let me know where you're calling from, and would also like to know any questions that you have as we go through here. I would love to have a debate with anybody out there. If you have contrarian views than me, I would love to talk about it with you. So without further ado, let's get over to see what's going on with interest rates today and everything else in the equation. So we want to focus in on what is going on in the background. So right now, here's what's going on. Mortgage rates, they ticked up a little bit today. Let me just let's fast forward and just tell you what we're talking about. So here's basically everything, the economy at a glance. And I go through this every day on my channel because this is what we're focused in on. Because the main reason why is this is what the Federal Reserve is concerned with. And now this is what our federal government is finally concerned with as well. So I'm not trying to get political, folks. After yesterday's events and last 2 days, we saw the stock market drop like 1,300 points. We saw mortgage rates. Mortgage rates are down about 0.5% from where we were about a month ago. So you guys are probably out there saying, okay, I think we just had a question here. Should I lock in my rate? Should I refinance? That's the question we have from everybody. So I'm trying to give you at least fill in the gaps there for you. So please ask any questions that we have. But what I'm going to go through right now is what we're looking at, what basically the economists and everybody are looking at, what the Federal Reserve's looking at, and then what is coming in and ticking in place and what's causing a lot of these things. So without further ado, let's get to it. So right through here, this is going to tell us the federal funds rate. We go over this every day on my channel. Then we're going to go through three pieces of the puzzle right through here. And these are most important to the Federal Reserve as well as our economy. So the first thing we're going to see is inflation. The inflation number you're seeing right here says the PCE. It's not the CPI. It's not the PPI. The number one inflation number that the Federal Reserve monitors is the PCE. And that just came out recently. And it ticked down to 2.5%. So that would tick that up right through here. So back in September, when the Federal Reserve cut rates, remember that time, and everybody's like, okay, I'm going to refinance. Well, I'm just waiting. I'll come back to this in a second. But the Federal Reserve cut rates in September, right through August, September, right here, when the PCE number was 2.1. Ever since that, it kept ticking up and up and up. And the last rally just came in, and it came in at 2.5. So that was good news there. Unemployment rates coming out this week, yes, on Friday. And we have GDP that just came out recently. So we'll see how this number comes reading through. What you're going to start seeing a lot of things as well is you're going to start seeing the phrase stagflation. So what stagflation is when we have inflation, but we just have a complete stagnant market. We have a market right here, a GDP, either negative or it's declining. Well, the last reading in GDP was 3.1, and it was revised to 2.3. Okay, so that's not good news on our economy. Then on the employment numbers, ADP came out with employment numbers today. There were supposed to be 144,000 new jobs created. There were 77. So it was half of what was expected. So the markets are like, okay, now what do we do? Okay, so now let's get over to really what's in focus. And I think I finally figured it out. And you guys, please join me in this. So the new President Trump, he's in office, and he's like, okay, you know how his feelings are with the Fed. He doesn't like the Fed. But he's like, I'm not going to fight the Fed anymore. Here's what we're going to do. We're going to put we're going to run this country like it's now a business. So he's bringing in business people from all over the country, all over, they have to be in the country. And these are top minds, people that run fantastic companies, hedge funds. You might not like Elon Musk, but look at what he's created. So you trust him, don't trust him. That's not the point. What we want to focus in on is how do we get the government now to run like an efficient business? And that's what they're trying to do. So you come into a company that's been in existence for 100 years, and they just everything gets lackadaisical, things fall through the cracks and everything. So what they're hoping to do at this point is say, let's dive into all this stuff. You and I both know there's tons of inefficiencies in the government. I'm owed a tax refund from 2019. I call once a week and wait for about an hour, and I don't get through to anybody. That's how bad things are. So do you keep complimenting that stuff, or do you make revisions? So that's kind of what they're doing in the background. So the thought here is, why have interest rates driven up so high? Well, because of the the deficit we have. So right here on your screen that you're seeing, we have a deficit. Let me scroll in on this. It's at $37 trillion, or almost. So you don't see this number going down. All right. So the number's not going down. So what that means is our government keeps printing money and printing money and printing money because they don't have enough to fund the government. Okay. So what they're trying to do behind the scenes now is say, okay, well, let's actually go in here and start analyzing. Let's go in and dive into the financials. And they're starting to find a lot of things. The frustrating part is, maybe you don't like them getting into all this private data, but let's say you had an elderly parent and you kept sending them money every month, and at the end of each month they were broke and they kept running stuff on credit cards, and you're like, Mom, what are you doing? So finally you're like, okay, let me dive into your checking account. Oh my goodness, you have subscriptions here. You have all kinds of things you're paying for you don't even use anymore. Well, that's what's going on. You see the Social Security thing? There's 3 million people or 5 million people over the age of like 105. So there is deficiencies in the system. So a lot of people also say that the contrarian part of that is, well, it's only $1 million here, $5 million there, $10 million. Guys, it adds up. Look at it ticking up there. Okay. So their thought is this. Okay. The reason why rates are going up as much as they are is because you have too much of something out in the market. Okay. Back in 2008, the too much of something we had was homes. And that's what caused homes to crash. If you don't understand the dynamics of that, you have to understand what really caused the 2008 housing crash. And it basically was one thing. It was basic subprime mortgages. Believe it or not, it was subprime mortgages that crashed the U.S. It was a worldwide event that took place. So that's what happened. There was teaser rates and all these teaser programs, and they were bad loans. They're outlawed now. They are illegal to get in this market. So that's what happened then, because you had way too much of something hitting the market. So what's happening now? This debt is hitting the market. You have to fund this debt by mortgage bonds, government bonds. Okay, and that's what we focus in on here every day. So what you're seeing on the screen right now is we focus in on MBS bonds right through here and government bonds. So what happens is when the government doesn't have any money, they have to sell bonds. When we mortgage companies need money, we sell mortgage bonds. So what we do is we package up loans into billions of dollars of packages. Investment firms do this, and they sell it on Wall Street. Okay, so this is a bond that is mortgage related. And what the difference between this and this one is, this is a 10-year Treasury. It gives the yield. So you can see up there here, the yield's 4.288. The weird thing on the mortgage one, it gives you a price. Why? I don't know. But so you have to figure out what's going on with this. So all you need to understand is we're in a -12 today. Okay. So when bond prices are going down, yields are going up. So you're going to see rates go up today. You're going to see it right through. Okay. So what causes this reaction? Well, what happens is you push, like we'll go to the treasuries, because the treasuries are associated with this right here. So when you have a treasury bond, or you have this debt, you have to sell the debt to the public and figure out what interest rate they're going to pay for it. And this is what this is. Okay. So if you have too much of something, you're dumping something in the market, what happens to the price? Well, the prices usually go down because you're trying to find an equilibrium. You have way too much of something, so you have to find this supply demand. So as prices go down, what did we say? Rates go up. So that's what's happened. We have all these bonds hitting the market in the trillions. So there's way too many bonds in the market, and it's jacking up yields. And you're seeing right now, the mortgage market right now is down 13 ticks. So there's something going on in the markets, and that's why I try to explain to you guys every day. So let's get to a few questions. I'll keep diving down into some of these things, but I want your participation. I need you guys to understand this, because there's another time right now we're getting pounded on the phone with people looking to refinance. And the question is, and I'll go back to my old saying, pigs get fat, hogs get slaughtered. Here's why I came up with that saying. I didn't come up with it, but you know what I'm saying, is in 2019, 2020, people were calling. I mean, we were doing hundreds of millions of dollars of loans, and people would call and they're like, okay, Dan, I'm at 5% right now, but I want 3. Well, you'd call them back and you're like, okay, I can get you 3. I want 2.87 now. And it's like, okay, we're saving you $500 a month. Now you want an eighth lower. I wonder if it never gets there. Well, a lot of people got stuck and it never got there, just like what happened last September. Last September, let's go back and see if I can pull this up on the chart. Last September, October, I have to go further than that. April, May, June, July. You can see right through here. This should be a September. Look at this September high that we're seeing right through here. You see at the top? Okay, so that's what happened. So when bond yields hit that, mortgage rates, this was the lowest they've been in years and years and years. See how it's topped off right here? Again, if this goes up, this is the bond MBSs. As that goes up, rates come down. Okay, this was, let's go back 5 years. It's not going to be there. That's a bad analogy, because 5 years ago we had real low rates. Right through here, this is the peak of the MBS chart. That means it's the lowest rate out there. So it was September 16th. See it? That's the day the Federal Reserve cut rates. Okay, so the Federal Reserve cut rates. Everybody was waiting on the sidelines. They're like, we're offering rates at like 6%. And people are like, I'm just going to wait. The Federal Reserve's going to cut. And I'm like, but we ran a huge rally. The Federal Reserve, what they're going to do isn't really going to affect these. People didn't trust me. Then all of a sudden what happened? Boom, rates went back up to 7.25. So they missed the boat. So this time when people were asking me, they're like, Dan, what should I do? Figure out your savings, figure out how much it's going to cost you, and then figure out the break even. You know, many times when you're looking to refinance, it is a fraction of the cost. I just talked to a young man in New York. He said, Dan, I'd love to refinance. My rate's 8, but the closing costs, I can't afford the closing costs. They're going to be what, $30,000, $40,000, $50,000. I'm like, no, they're going to be in New York. It's a little expensive for your title work for refinancing, but I think his title fees were like $5,000 or $6,000. Now in New York, that's cheap. Okay, when you're buying a house, it could be, like he said, $30,000, $40,000, $50,000. In a normal environment, I'm helping a friend right now. We're closing in Illinois. His title fees are $995 flat fee. So if you were buying, probably $6,000. So this is a great environment to at least kick the tires, and maybe you refinance and you go from 775 to 675. It saves you $300-$400, and then you wait and rates get down to 6. Look at the numbers, see what your break even. Bring it on down, but make sure you try to also structure your loan term that you're not going way backwards. So that's one thing I would suggest. So that's what we're talking about there. Let's get over to some of the questions that we have. But please, guys, as you're watching, let me know where you're viewing from. So let's get over to this. Should I wait to lock the rates as soon as there's a chance or rate drops? That's the perfect example. The tough thing is we don't know. Well, the reason why I'm having this event is I watched I know it was in the State of the Union last night, because I'm trying to get a feel for President Trump. What are you thinking? What are you thinking behind some of these? I get what he's doing. Like I said, I'm from a small coal mine town in West Virginia, and my dad, all my uncles worked in steel mills. And when China was dumping steel in the 80s, it just decimated. My town basically turned into a ghost town. And now they're regentrifying, but it's dismal. So are tariffs needed? We need to get back to manufacturing. What happened is we lost all of our steel mills. We lost all of our car manufacturing. We lost a lot of the manufacturing base in this country, and that's what keeps a country strong. So, even when you talk to old timers, they're like, man, when we start getting rid of steel and autos and stuff like that, it's not going to be a good country. We don't want to be just a service-related country if you want to be strong. So to answer your question, I don't know. What I would say is if you guys are out there trying to get quotes, our quote here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Here's all I ask you. We don't have, I'll be blunt, we don't have time to go back and forth with you guys, and negotiating these things. It's really, we don't have the time to do that. But we offer the service. Is basically this. You put in your application. We're going to pull your credit one time. I work at a federal bank. And we're also set up with 30 other lenders that I can use, and I can use their programs, their interest rates, and everything else. That's how we offer you one credit pool, one application, and we're shopping your loan over 30 different lenders. If you're doing that on your own, all I ask you to do is send me the best offer you got. I don't want to be a part of the car dealership game where you go back and forth, bartering. Just send me the best deal you got. I'll go through all my 30 lenders, see if I can match it or beat it. Love to get back with you with it, but I can't go back and forth and back and forth. My apologies, folks. I'm here to help people, but we only have so much time in a day to do that. So if you like the numbers where you're at now, your break-even cost is 6-8 months. That's it. I would suggest doing your refinance. So that's that part of it. So thank you so much for that question. Hey, Dan, a lot of it is misinfo. The people supposedly receiving the Social Security that are over 100 years old is not happening. They do not have date of death for them. They are not receiving the funds in reality. I don't know that. I don't know if you know that. I'm not going to get political. What we're being told is they have to get that data from somewhere. Are checks actually getting cut? I don't know. I'm not going to come out here and say I know. And and that's what there's a lot of misinformation out there, and it's hard to spread unless you factually know that it is not being done. Maybe just keep everything to yourself. I'm not trying to be rude, but that's the best I can do. There's too many people just guessing at stuff. If you have finite proof and you can show it, show it. Other than that, it's like fake news. When do you think rates will drop under 5%, if it even will drop that low? I do not think it'll drop that low. I don't, unless the country we go into a massive recession and we have major problems. Rates are, you'll be lucky if we can hit 5% in the high 5% anytime in the next year or two. So 6.5% range is where I'm looking at for the next 6 to 8 months, and then from there, I'll be honest with you, I don't know. And for anybody to come out here and tell you, here's what's going to happen, they have no what's going to happen. And that's why I was so against election people and things like that, because you look at even the data that was presented 4 years ago when the market was supposed to crash, and you look at the data we have right now, because I do this all the time. The market was going to crash. Now you're starting to see those videos. It's going to be as worse as 2008 again. We guys have been telling that for the last 5 years. So why isn't it going to be now? 2005 is going to be as worse as 2001 because the crash never happened. Okay, so you can find a ton of details here, but I don't know what's going on in your market. The only thing I can provide you are the finances behind all this stuff. So thank you so much for your question. Let's get back to, but Rakesh, if you got any more to offer us, or if you can give us a website or something, I'd love to dive down there. I don't know the answer, and how you started it was misinformation, and those payments aren't going out. So if you have any factual data, I'd love to have it, because on this channel, we really just want to talk about the facts. And you're also asking for my opinion on things, and that's why a lot of people are here. So I'm giving you my opinion. And if you guys want to differ from me, I'd love to negotiate that with you, but let's keep going. The next piece of this puzzle is, when do you think, we got to that one. Let's go to the next question out there. Watching from New York. Thank you so much. We're getting a lot of business from New York, New Jersey, and LA right now. So I can't thank you guys enough for watching out there. Is there anything else down here? San Diego, we got a New York. Anybody else out there? Let's see what the last one says. Got 6.625. Fantastic. So these are the rates that we're seeing right now. I just did a couple quotes this morning. We do have rates in the 5s if you're looking at a 15-year term. So what a lot of people are looking at right now is, okay, let's drive down. Why are you watching the channel? Well, we're trying to figure out what's going on with these. Okay, so let me give you my short-term outlook and my long-term outlook, okay, or midterm and then long-term. My short-term outlook is it's going to be volatile, because you have a negotiator in the White House at this point, and he's trying to negotiate. And he's got, if you look at his cabinet, you might disagree with some things. I think the cabinet is pretty darn good. You have a lot of business people in positions where we need that efficiencies. And then you have tech people, and I really don't care about their ages. I mean, my kids are in their late 20s, early 30s, and they're whiz kids, especially, with math and everything else. So that's that part of it. Short term, it's going to be choppy. So if you're seeing things like this happen, I would highly suggest, if it's saving you a lot of money to refinance, and you can save $300, $400, $500 a month and recover your costs within 6 months, I would do it. I'd give it a thumbs up. If you're looking to buy in this environment, it's a little bit tricky. So here's what a lot of people do. They'll watch me, and then they'll go out there and they'll put a house under contract, and then they'll come in and keep asking me about what's going on with rates, and then they'll go to another lender and lock. It's kind of unfair. Okay, I'll be blunt with you. At least give me a shot, okay, at your loan application, because there shouldn't be any reason why you couldn't use me. But I'd love for you guys to watch my videos and actually participate in these things. But if you are looking for a house or looking to refinance, I'd love to at least have the opportunity to help you there. So let's see what the next piece of the puzzle is. We have Vasali, and then what are the average costs for in Washington State? You know what, Jonathan, if you could shoot me an email, I can actually pull up, if you give me the loan amount, I can actually tell you to the penny what your closing costs would be. So let me pull up that right now under my comment section. You can send that to that right there. That is my email address. If you also have loan estimates, like if you did get a quote from somebody else, give me your best quote. That's all I'm going to ask you guys. If you send me a quote or a loan estimate and I can beat it, I'm expecting to win your business. I'm not expecting you to go back to that company and start bartering back and forth and back and forth. I'm out. I'll give you my best shot forward, and then if that doesn't work, God bless you. Like I said, we only have so much time in a day. Okay, so let's get back to what my thoughts are. Okay, so they're going to start cost cutting things. Anytime you come into a company and you start making changes, like the reason I left my last bank, they got bought out by ServBank. I stayed there a year, couldn't take it. So I had to move on because it wasn't the environment for me. Okay, so that's what I did. So if you get into a company or somebody takes you over, the first time a business comes in, they're going to start looking and saying, okay, where can we cost cut? Where is there duplicate things? You guys might have been through a merger or something like that. Usually top management starts to go and so forth. Some of it has to do with wages to bring down costs because health insurance costs are ridiculous. But there's a lot of other factors in there. Is AI helping things be more efficient and things like that? So that's what we have to focus in on. So short term, tons of interruptions. And that's why I was like, I don't see rates really moving much at all because everything that's happening behind the scenes, if you look at it at face value, it's like it's inflationary. It's inflationary. You add tariffs to something and it's inflationary. You extract out millions of people out of our workforce, immigration, it's inflationary because the only way you can do that is you have to fill those positions with, let's say it, higher wage people because you're extracting those low wage earners out there. So is that fair? Fair to the government? Fair to the people? Yes, it's going to cost us more, but in the long run, is it more efficient for the government? So that's what we're focusing in on. All those things, when you look at it at face value, they're inflationary. So my expectation is when I started seeing quotes coming in this at the beginning of the year saying, mortgage rates are going to be, Barry Habib came in and said within the next 3-4 months, you're going to see rates in the, 5.5, 5.75 rates. And I'm like, man, I don't know what you know that I don't know, but everything I'm seeing right now behind the scenes isn't pointing that way. We have a couple other people say that. And I was hoping I was wrong, but right now it's looking like I'm kind of on point because the disruptions are still there. Hopefully we have some settlements in Ukraine and Russia, as well as you haven't really heard much about Gaza in that area much lately. It's been Ukraine and the tariffs, things like that. So you can see how our attentions kind of get distorted. But short term, it's going to be a floppy. It's going to be real floppy. But the good news is the Wall Street and everybody else starts to see, okay, we can cut costs. We can be more efficient. Hopefully we can do without a lot of these things. That'll start bringing down our national debt, hopefully, or at least because one of the things that President Trump said in his speech yesterday, he wants a balanced budget. So he wants this thing not moving. So if you have a balanced budget, think of it this way. You don't have as many bonds hitting the market, flooding the market, driving the prices down, then you can get back to equilibrium. And then you can have where the spread between the 10-year Treasury and mortgage rates are back to maybe 1.5%, because there's a spread right now between the 10-year Treasury and 30-year fixed rates that's way out of whack. You can see it right through here. The 10-year Treasury is 4.28. Let's just go to mortgage rates. 4.28, 6.78. So it's a big difference. I'm bad at math, but you get what I'm saying. Usually that spread is 1.5%. So mortgage rates in a normal environment in history should be let's say 1.7 above that. So rates should be about 6%. Where are they? 6.75. So it's inflated by about at least 0.5 to 0.75%. That's the risk premium that you're seeing right through here in the bond markets. And the biggest reason is, again, right through here. So these are the things that you don't hear. You don't hear the politicians talk about. They're like, well, just keep doing all these entitlements. Well, you can't. It's great for people with entitlements, but it's hurting our country. And I'm not here to hurt anybody, but it has to be fair for everybody in the whole country. So that's my take on that. Let's see if we got any more questions back there. I'd love for you guys to bring in some questions. Love to answer anything we got. Let's see. What did I not do yet? Let's see what we got here. What about refinancing? Paul, that's what we've been talking about. So if you're looking to refinance, I'll recap this. Reach out to me. Send me your mortgage statement. Give me your credit score. Tell me what you're looking to do. I'll have a quote back to you with a rate, a payment, and a fee within hours. Okay. Let's see if it makes sense. I'll say it this way. I talk to people every day. Don't wait for that eighth of an adjustment lower. Don't, pigs get fat, hogs get slaughtered. If you like the numbers, yes, can they be any better? I had a young man ask me yesterday, Dan, by using you, how do I know I have the best rate in the entire country? You don't. It's the best that we have the ability to. It's like if you're looking for an insurance quote, I use an insurance broker. I don't call Allstate, State Farm, all these other places. I'm like, you got my best interest in mind. Find me the best premiums out there, best policies out there, and I'll go with it. We have a lot of people do is they'll come to me, I'll do all this shopping for them, and then they'll continue to shop. If that's you, God bless you. Keep doing it. But keep me out of the equation. I'm out there to help those that really need help, basically from application, the keys in their pocket. So, but this is the culprit of what's going on right now. But refinancing, all I would say is if you can refinance and recover your costs within 6-8 months, I would do it, and then wait and see if rates go down even 0.5% more, and then call again and see what those costs will be and what your recovery rate's going to be. All right. Is Florida ever going to allow 10% down with a limited questionnaire? I think you're talking about condos. There are lenders that will do spot condos. I'm not quite sure what you're asking, Dave. If you can elaborate on that one a little bit more, if you're still with us. But I have a condo in Florida, and dude, I'm feeling the pain. So, but let me know what you're asking about on the questionnaire, if you don't mind, David. So let's get to Daniel. Let's see what Daniel has to say. Oh yeah, Washington State here. Thank you so much for joining. We got people all over the country, which is awesome. Next piece of the puzzle, please. I don't have a moderator in the back, so please don't say anything bad on this channel. Thoughts on floating on new construction? I really don't have any problems with floating right now because, okay, let's get back over to my midterm agenda. Okay, so here's what I'm thinking is going to happen. We are going to have a deal in Russia and Ukraine. That's going to help huge. If he can pull off this mineral thing with Ukraine, another huge piece of this puzzle. It's like when China comes here and we get all pissed off. China's buying up all our real estate and everything else, and we get mad. Well, why don't we do that same thing? Why don't we go over there and get some mineral rights and things like that? That would only help our national security. Okay, so that's that part of it. And but let's go back to the new construction. We'll go down that route. Our midterm. I'm sorry. I got tickers going over here. I got this going over here and this going over here. So midterm, I think a lot of these things are going to be resolved. And then you're going to have, if I heard this right, and I'm going to look into it even more, when he talked about reciprocal tariffs. Okay, so basically it's this, and I didn't know this. And I'm doing a bunch of research in the back, so I hope to present this to you guys maybe at the next event. You see the tariffs that people put on our stuff, like India. There's 100% tariff on cars, and somebody's going to call me out on here, which I don't know. That's what we were told. I actually looked it up. I did a chat GPT on it, and with some autos and some things, it's accurate. So I'm going to do a lot of my research, but if there's anything on here you guys want me to talk about, let me know. But let's go back to midterm. You're going to have a lot of these things resolved. How the tariffs go are going to be the wild card. Okay, is China going to bend a knee? No way. They're not going to show any lack of strength there. Canada, Mexico, some of the other countries, I think it's going to affect them a heck of a lot more than it's going to affect us. Okay, so that's my thinking there. Okay, if we have reciprocal tariffs, why should we complain? It's basically if you're putting a tax or tariff on our autos of 10%, well, why can't we put that same thing on you? So these are the things, if you guys want to debate me on here, I'd love to get other people's feedback. I'd love to get sometimes if you're a crashier person, thinking the markets crash every year, please join me. I reach out to all these people and nobody will respond. So midterm, I think we're going to be 6 months from now, things are going to be much better than they are. A year from now, I think a lot of this dust is going to settle. I truly do. I think a lot of the costs are going to come down into play. We're going to get if they get the national debt in line, which we're seeing right through here. If then we can get less bonds hitting the market, that's going to help yields stabilize, and that's going to help the MBS market huge. Take out that spread. So if we can put all that together, we might see rates at about 6% by the latter part of this year. So now, do you hold off? Now, the next question is going to be, okay, Dan, now in 6 months, rates are going to be 6. So I'll just hold off my refinancing. What if I'm wrong? What if I'm wrong? And I can be wrong. Okay. I'm just giving you my insights on these things, what I think is going to happen over the next, couple weeks, the next few months, and the next year. So next few weeks, pick your spot, because the rates are all over the map. Here's what if we see a 5-day chart, look at this. It's all over the place. So where rates going to go from here, I'll keep you updated every day, folks. I promise you. Where it's going to be, 2, 3, 4 months down the road, I don't know. Most likely it's going to be less, but don't look a gift horse in the mouth. Don't be that person where, pig gets fat, hog gets slaughtered. If you like with the numbers that you're seeing now, I'd highly suggest you're looking in to do something. So let's go to some more questions. We got somebody in California. Thank you for joining us. Yeah, for condo questionnaires, all other states allow 10% down with a limited review. Florida is at 25%. I'd have to look into that, because I've done condos in Florida with 10% down. So are you talking, Dave, shoot me an email if you would. I'd love to chat with you. I think you might be in the business, and maybe you can teach me something, or I can teach you something. So Dave, please shoot me an email. I'd love to chat with you kind of behind the scenes. Let's see what we got next. LO, who is the LO? What is the cash seasoning period in general for down payments? Usually 60 days. There is some loopholes around that we have, and hopefully your loan officer, hopefully I'll be your loan officer. I can work you through those loopholes. But if not, your loan officer should be able to find you a loophole if you have money that's not quite seasoned those 60 days. So I'm not going to share that here. That's how if you want to win, I'd love to win your business by just explaining you some of those tips and tricks. So let's get to the next one. Is what's the refi rate? 611 house, 300 down, loan amount. Please, Monica, send me an email, and I'll give you my information right through here. Let's see if I can pop that up on the screen. Please send me an email. I'd love to respond to you. This is for my emails. If you have a loan estimate you want me to review to see if I can find you better, I'd love to help in any way I can. So I can't. It's hard to do quotes on here. Just let me go through this with you guys real quick before we kind of maybe conclude. But I'm here to be on here a whole hour if you want me to. So the biggest question, or the most common question I get, is basically that question that we just got. Let's go back to it. Sorry, folks, I'm flying solo today, so I'm trying my best with the chats and everything. They were asking what the rate is. Okay, so I think this is the one. Okay, so what's hard to do is, and I get this question every day, there's a lot of factors that go into the rate. So like, for example, this one, and I used to say this every day, but a lot of people are like, Dan, okay, you say it every day. We don't need to know it. Well, let me explain to you what this rate is. Okay, so this says the 30-year fixed rate. Does everybody get this rate? No. Okay, so how your rate gets created is there's many factors, but the biggest components of this are, well, let's dive into this one, for example. So to get this rate, you would have to have 5 pieces of criteria. Okay, those 5 pieces are this. It's going to be your first home, your primary home, and a single family home. Okay, so you might be, okay, that's me. Well, then if you open that book, and I always say, don't judge a book by its cover. If you open the book, it's going to tell you right down through here, and I'll blow this up. These people are getting they have a 75% loan to value, meaning they're putting down 25%, and they have a 780 credit score. Okay, if you see some of these, there might be points involved. Like we usually prepare a method to adjust rates to the points and so forth. But, so that's what it is. So what is your rate for today? It's hard to say because there's a lot of components to it. And here's some of them, just in case, just so you guys understand how this works. So your credit score, a big piece to do. Is your credit score 620 or 740? Big adjustment in the rate. Okay. How much are you putting down? Are you putting down 3%? That's what most first-time home buyers need. Are you putting down 5%, 10%, 20%? That's a big adjustment as well. Okay. Also, what kind of property are you buying? Is it a single family home? Is it a townhouse? Is it a condo? All those have different rates. So there's probably 12 components that calculated into your rate. So it's hard when you ask that question, what is today's rate? It's hard. I can get your information, but please, if you would, shoot me an email with that, and that's I'd love to answer you. And and Monica, if you could send me your mortgage statement, if you have one, or just give me that criteria there. I do need your zip code because your zip code comes into play in this, and what term are you looking at? So if you guys can provide that for me, I'd love to help in any way I can. Okay, so let's get to the next question. Is FHA has lower rates than conventional, but has MIP? Yes. How big of a difference is the rate between FHA? Need to outweigh that's a perfect question that you have there. And I do that a lot of times when I do my sessions. So what do people offer or ask is like, Dan, what's like, I had a young man right before this. He's a veteran. He's having a tough time finding his documents for a VA loan. So he said, well, I got a quote for an FHA loan. I got a quote for this. I'm like, dude, you got to get the VA loan because that is your best parameters when you're getting that. So FHA, it's hard to say, on the FHA piece because there's all those pieces of criteria. What is your credit score? What is this? What is that? If you want to send me an email on this, Gilberto, I'd love to send you an analysis back and I can answer. Just send me an email with your questions. I'll do a video, do a response for you and send it right back to you in an easy to read form. And but thank you so much for reaching out with that question. Next question that we have is, are closing rates for ARMs lower than conventional? Can you buy down ARM rates? Okay, that's another thing we're hearing a bunch about right now. Everybody's looking to buy down the rate. Okay, so I'll just give you can do whatever you want, but I'll just give you my thoughts on this. Okay, so a lot of people will ask, okay, what is the rate? Give them the rate, and then how much can I buy it down? Well, it varies. My side, because we're set up with 30 different lenders. So every one has a different structure. So you might like say, for example, today, 6.72, that's the rate up here. Okay. Might go to one bank and 6.72 to get 6.6 might be $300. Another bank, it might be $2,000. So that's also another thing when you're choosing your lender. We call it what's the rate stack look like? Are the buy downs pretty cheap on a rate stack? So I'll offer you, here's the rate stack that you can choose from, and you can choose any of those. You can buy it all the way down to X, and that's how much it's going to cost you. So that's what we can provide you there. Now let's get over to the ARM question. This is pretty interesting. Okay, so you might have heard what's called the inverted yield curve. Okay, so here's what the inverted yield curve is. It's when short-term rates are higher than long-term rates. So you might say, okay, whatever, but it doesn't make any sense. Okay, so let me put it this way. If you were to put money into a savings account or a CD or something like that, and you're like, okay, I'll put it into a 3-month CD. Now your money's tied up for 3 months. You can't withdraw it. Okay, and that CD rate is paying you 10%. Okay. And then you're like, heck, wonder if I tied it up for 5 years. And they came back and said, we'll give you 2%. You'd be like, that's idiotic. I'll take the shorter term one because I want that 10% rate and I'll just keep rolling it. Well, that's what's happening in this market. So we have shorter term rates higher than longer term rates. Well, it was really upside down about several months ago. You can see right through here. The spread's usually a little bit different than this. On the screen, you're seeing here's the 30-year fixed and the ARM. I am set up with, like I said, 30 lenders. This ARM rate looks pretty darn good. Most lenders don't even really have, they'll have an ARM rate for you, but they don't even want them. That's what's happening. There's really not much of an appetite in this market right now for investors when it comes to these shorter term maturities. So that's one reason why, or that's the reason why short term rates aren't much lower though. But if you go back here about a year ago, short ARM rates were higher than fixed rates. Didn't make any sense, but great question. Let's get to another one. Let's see what we got. Do you work with new homes? If so, what are you seeing going on? Because seeing those numbers growing like crazy. New homes. Yeah, new homes are, we do. A lot of times if you're building a home with one of the big builders, you can't beat their financing. You just can't beat it. They'll give you all these price incentives and things like that. Here's what I would suggest you do. We know the environment rates are coming down. I would use all that money that my builder's given me to pay all your costs. You imagine getting a loan and it didn't cost you a penny. Okay. Then, send your loan package to me or keep following up on my videos. When you see rates get like 0.25% or 0.5% where you are now, call me and we'll refinance that loan. There is no waiting period you have to do. On an FHA loan, you usually have to wait about 6 payments. Same thing kind of with a VA loan. But on a conventional loan, you can refinance basically the next month. I'm actually working with 2 people right now that just made their first payment on their new construction loans, and we're already turning those over into refinances because they're saving on average about $300-400 a month. So fantastic opportunities for them. They found us on YouTube, and we were able to educate them enough on how to do all this. So that would be my suggestion there. So let's recoup today's show that we have. So mortgage rates, they're up a little bit. Let's refresh this. They might be up a little bit more. No, they're stable right now. A lot of times when people say, Dan, mortgage rates, I see they went down or up today, or the other day the mortgage rates went up, and I'm like, oh, they went down, and I'm like, I focus in on this. Okay, I can tell you exactly what the bond market did. Like, let's go today. So if I just look at this, just point blank, I'm like, okay, this is down. When the price of a bond, the mortgage bond goes down, rates go up. I can honestly just automatically say they went up today. So then when I go over to here and it's different, it usually isn't. But sometimes every blue moon, it will be different. I'm like, I don't know, because I'm watching the bond. This is live ticker on the bond. There's a lag through effect, and it actually probably a calculation in here. That's why I didn't really, I don't focus on that. I focus in on this and these charts that I have through here. And that's what I do. If you're a first time viewer on this event, I do events every Wednesday, live events for you guys to ask questions. That's what I'm here for. I'm a loan officer licensed in all 50 states. Love to help you out. And that's what we do, our live events. And I do 2 videos a day to let you know what's going on with real estate and what's going on with interest rates and so forth in the morning, and as well as the afternoon. And hopefully I'll also can teach you about, how to invest. On Saturdays or Sundays, I come up with videos to how to invest. Like last weekend, we talked about buying ETFs and things like that. I think this coming weekend or next weekend, we're going to talk about Bitcoin and cryptocurrencies. And I'll have guests on here talking about those with me. So join us on some of those live events, but just be a subscriber to my channel. You're going to learn something every day. I can guarantee it. So let's just recap some things. Here's what's going to be in my closing bell video. It's going to be basically rates are up today. Some of the data coming in from the Federal Reserve is more data is coming in actually the latter part of this week. The only data we had in so far today was ADP's payroll numbers, and I don't really put a ton of credence in on theirs because there's always revisions and updates and so forth. But tomorrow we do have initial jobless claims coming in from the federal government, and we have that unemployment rate coming in on Friday. And remember, those are one of the big things that the Federal Reserve monitors right here. That is, we had the PCE coming in last week, came in at 2.5. We have the unemployment rate coming in this week. So these are going to be 2 of the 3 components the Federal Reserve is really monitoring. Why is that important? Well, let's go up through here. Federal Reserve's meeting in less than 2 weeks. They're going to tell us exactly what they're going to do. What's expected? Well, if you go down through here, there's nothing expected at this meeting. They're supposed to keep rates right at 4.25 to 4.5, the federal funds rate. There's 93% chance they're going to do that. Next meeting is a 58% chance they're going to keep it there. And then at the June meeting, there's a 95% chance they're going to cut. I'm going to see how this works out, because if the economy keeps going as it is, this might move up to this, because today's jobs numbers were dismal. But let's see how the job numbers come in tomorrow, and then the true job numbers come in from the federal government on the unemployment rate. They come in on Friday. So that's that report. Any other questions out here? If you do have them, I would love to answer any last minute questions. Let's see, we will be using the builder and all the incentives to get 6.125 rents rates go down. We reach out to that. Thank you so much. I greatly appreciate it. So that's our report for today. Let's get over to see how the markets are doing. Look, this is what I mean. If you just give it an hour or two, the Dow Jones was down 500-600 yesterday. Now it's up 500 today. So just wait. So we have a Cinderella story across the board through here, green all the way across the board. We have the VIX down 6%. That's fantastic. We need this number to be about 13. Okay, that's telling us the anxiety levels on Wall Street. You go over here to oil, and oil I think is nice right now too. Oil's down almost 3% to $66 a barrel. This alone is going to help inflation tremendously. So we're going to be paying attention to the inflation figures coming out, but the rest of this week we're going to be focused in on the jobs report. So hopefully you have a better understanding now of how tariffs, how everything else is going to play a role in this short term, midterm, and long term. I hope you understood all that. If you have any questions, I would love to answer those for you. All you need to do is reach out to me. My email address is right down there at the bottom, and I would love to be of service to you. So my name is Dan Frio. I do this report every day. Love for you to be a subscriber. Other than that, if you don't have any other questions, I'll be signing off for the day, and we'll be back here next week. If you're a realtor out there, I'd love to talk to you, because I'm trying to fill some spots because I can give you some boots on the ground on what your market area is doing. Like I said, I talked to somebody in Vermont and Utah yesterday, and they were both like, houses are crazy. Prices keep going up and people keep bidding them up. So I'm seeing that on our end as well. So if you need any help on that front, if you're looking to buy that first home or maybe that first investment property or looking to refinance, I would love to help. How do you find me? Well, you go to the rateupdate.com. There's our website right through there. But before we go there, before you don't leave yet, I got a public service announcement for you. I need you to do this, okay? Before you put in an application, buy a house or refinance or buy a car, this is a public service announcement, folks. You will thank me for this in the long run. Did you sign up for the do not call list? Well, I hope you did. Well, you better sign up for the Stop My Trigger Leads list. What are these? Well, basically, when I pull your credit or any bank pulls your credit for a mortgage or a car loan, what happens is the credit agencies now sell your financial data to basically whoever wants to buy those. If you want to stop that from happening, you'll thank me, because when you apply for that mortgage or that car loan, you're going to get calls from 20, 30, 40 different companies. Most of them are telemarketers, and they're hard-pressed telemarketers. So just go to the bottom of this screen and fill it out, and you'll be on your way. But who am I? What do I do? Want to find out more about me, folks? Just visit me at the rateupdate.com. You can put your application, you can schedule a consultation with me, or you can even scroll down below and you can find my email address as well as my phone number. So thanks so much for watching. God bless. Have a fantastic afternoon. And